welcome back. One way to avoid foreclosure in today's tough housing market is to get the lender to let the home be sold for less than the value of the loan. It's called a short sale, as you probably know. About 12% of all home sales now are indeed short sales. But they can get tricky when there are two loans on the home. CNBC's Diana Olick has uncovered evidence of growing fraud in some of those deals.
That's right, Simon. As you know, many troubled borrowers actually have two home loans. That is the primary mortgage and then a piggyback loan or a home equity loan, which were so popular during the housing boom. Now, in a short sale, usually the primary lender will negotiate some form of settlement, maybe at 10% of the original second loan, be paid to that second lender in order for them to release the debt. Now, that second lender legally can refuse and let the home go to foreclosure, thereby blocking the short sale. But then they get nothing in the end. What some real estate agents are telling us now is that some second lien holders, secondary loan holders, are demanding cash on the side because they're not satisfied with that primary lender's settlement. They're demanding cash from the home buyer in the short sale or even the real estate agent and not disclosing it.
What they're doing is illegal because it's a violation of the RESPA rules. Any payment in conjunction or incident to a transaction must be represented clearly on the final settlement statement. They're asking for this payment to be removed from that and paid outside of closing.
Gentry claims to have lost one short sale already to foreclosure because she refused to break the rules.
When we confront the lenders and tell them that this request is illegal and a violation of RESPA, they tell us it's been cleared through legal and that they don't care, do it anyway.
Gentry says she's personally had it happen with Citi Mortgage and JP Morgan Chase, but a recent survey by 1-800-CASH OFFER, which brings investors, realtors, and sellers together, found 200 other real estate agents citing similar experiences with those lenders as well as Bank of America and other large lenders.
Some people are definitely doing it. We've spoken with a couple of real estate agents and brokers who have said they have engaged in the practice and they have seen other agents engage in the practice.
We contacted Citi, Chase, and Bank of America. Chase had no comment. Citi and B of A gave us statements. From Citi, we certainly do not require settlement agents or any other parties to violate applicable laws. And from B of A, it is against Bank of America's policy to accept off-HUD payments on its second liens. Now, we contacted RESPA officials at HUD, told them this story, and they said clearly it's a red flag, it's illegal. We also contacted the Treasury Department and the Federal Trade Commission, and so far none of them say that they have any investigations ongoing, but they were all very interested to hear this story. For more, we've got a lot more details on the blog, realtycheck.cnbc.com. Simon?
Diana, just to be clear, are they asking for the cash on behalf of their companies or effectively as a bribe? And what is the allegation?
Well, what they're trying to do is get the cash on the side to get something out of that second loan because in general the second lien holders are losing out and they're threatening to block these sales if they don't get the cash on the side, at least part of that second loan.
All right, Diana, thank you very much for that. Joining me now is David Barenbaum. He's the Executive Vice President of the National Community Reinvestment Coalition, an organization that promotes banking services and affordable housing for America's working families. David John is a Senior Research Fellow with the Heritage Foundation. Mr. Barenbaum, have you heard of this practice that Diana's now talking about?
We've experienced it firsthand in working with consumers who are trying to do modifications or short sales or even simply arrange for alternate payment plans with their mortgage companies. Seconds are not included in the Home Affordable Mortgage Program right now, and both realtors and consumers are feeling the weight of some of these actions, including some of these problematic asks.
So what should we do as a nation when we look to, I mean, what should be the first point of contact to stamp it out?
Absolutely. Consumers and realtors, professionals alike, should be contacting state attorney generals. They should be speaking with lawyers. They should be speaking with the Treasury Department and demanding accountability from these financial institutions. Right now, they're getting taxpayer benefits, but frankly, they're not following through on their commitment both to their shareholders and investors.
Let me change the subject, if I may, and indeed turn turn to you, Mr. John, specifically on this question of the permanent modification to loans that obviously the Obama administration was attempting to push through the financial services sector, though the process has been very slow. 7% of applicants have actually had some joy from that process. Where do you think, David John, next we need to take the debate in order to actually improve the situation in housing?
Well, sadly, there is no easy answer to this. The problem is that the ownership of these mortgages has been sliced and diced and spread around through mortgage-backed securities. And redoing a mortgage permanently is both long and difficult. So far, we've seen 2 different Congresses and 2 different presidential administrations attempt to deal with this, and it can't be done. Sadly, we have a large number of people who have either reduced or no income at all, and they're not going to be able to afford a house regardless of whether there's a modification or not. So I'm afraid we're going to have to just go through this.
David, is he right?
No, I take strong exception to that.
I thought so.
Quite candidly, 2.8 million foreclosures in the past year, up to 8 million more when prime option arm loans adjust in the coming year. Frankly, the servicers, the banks have to ramp up what's going on with the HAMP program right now. 66,000 modifications, and there are ways. It's been suggested that using eminent domain, the Treasury Department and government agencies can acquire these loans through reverse auctions, through other actions. Simply modify the loans using the savings from market value right now, and then sell them back to responsible investors.
David, briefly, if you would. David John?
Well, that was tried during the S&L crisis, and the Supreme Court ruled that the government was liable for violating a contract. So that's very easy to say, but sadly it just doesn't work in practice.
Okay, we have to leave it there. Thank you both, David John and David Barenbaum. Thank you very much. Have a good weekend.